All right, good evening everyone and welcome to today's market recap for this week. And I'm just going to be going over some of the things that happened last week, how the markets closed last week, how the daily closed last week, and I'm going to be looking at my expectation for this coming week. Generally, when I look at price, especially on the weekly chart as it is here, you can see that price has generally been held in a particular range. So if I just draw, let me go to the daily. If I go to the daily, I think the daily looks okay. Give me a second. Weekly. Let's go back to the weekly. All right. So you can see that price has generally been held within this particular consolidation zone. Right, so price has generally just been held within this particular consolidation zone. So it is important for us to look at this and understand that we have to be nimble in price. All right, if price breaks above the high here, then we know we are generally bullish. If price breaks below the low here, we also know that we are generally bearish, and that would be amazing for us, but we don't have that yet. But we have to be nimble in our trading. That's what it means. At least for me, since I trade USD pairs, and this is DXY. My two major pairs I trade is Euro USD and GBP USD. So you have to, so Euro USD moves very closely. It's closely correlated with the DXY. It's inversely correlated. So whatever the DXY is doing, Euro USD is most likely doing the exact opposite. Right, now the reason for this is the DXY is made up of a basket of pairs, and the largest pair in the DXY is the euro. That's why they are so closely inversely correlated. All right, so just looking at the weekly charts, one of the first things that jumps out to me is the fact that we just took out the weekly liquidity and we had a very clear rejection of that weekly sell side on the XY. So on the euro, that should be the buy side liquidity on the euro. So that jumps out to me, and how price rejected of it is something that tells me that price might be looking to do some bit of an upward movement. Looking at this, I know that I have my weekly fair value gap here. So price has the potential to run into that weekly fair value gap before it begins to drop. So understanding this, I will be careful of taking sales ahead of the drop. All right, so I'll be careful of taking sales ahead of the drop. Either I'll cut my risk, or I will not take any entries at all, knowing that there's that potential for price to go up to the weekly fair value gap before it drops. Overall, has my direction changed? Not really. Personally, not really for me. Right, but I know that we could have some bullish movements before we see that bearish movement. Now, let's go to the daily chart and let's see what we see on the daily. So on the daily, we have some very interesting movements on the daily. Now, for those of you who have been with me for some time, you can recognize when we talk about a break of structure. You look at price going up this way. All right, now this is the low. It goes up and makes a high over here. It drops down, makes a low, and goes up to make a high. Now there's no other higher high that was formed above this, so price comes down, it comes to go up here and comes down. Now where will be my break of structure? At this very point where my line is, this is my break of structure. This particular, the low of that candle right there would be the candle that causes my break of structure. So price breaks below this, causes a change in the state of delivery, and then from there it goes down to take this. So now I can tell that I'm still generally bearish. All right, my position on the direction of price hasn't changed. I'm still bearish, but I understand that because of what I saw on the weekly, that clear rejection on the weekly tells me that price has the potential to run up before it runs down. So assuming price is going to run up, where is it going to run up to? All right, so those are things I'll be looking for. Where is price going to run up to? Right from here, the first potential for price to run up to is to this fair value gap. Now, which if you look very closely, it looks as though price has almost respected that particular fair value gap. All right, but this was just 1 week's candle. Right, this all of this movement is just 1 week's candle. So knowing that there's still that respect of the fair value gap in the weekly side, sorry, knowing that there's still that take out of liquidity in the weekly side and the respect of that liquidity zone in the weekly side, I am still going to be bullish. All right, bullish to which point? All right, because so remember my overall direction is bearish. My overall direction is bearish, but I recognize that there's going to be some bullish movement. I have two options. My first option is to just stay out of the trade and wait for market to play out the way I want it to play out. My second option will be to take a trade, however, to cut my risk in half. All right, because this is a counter trend trade. We know that this is not the trend that we are looking for, so we are going counter to the original trend. That could mean that we could have less momentum candles. We could have bullish candles, but they may not be as big as we may want them. So we may not have a very good entry in that situation. So you may not want to even be in a trade like that. Ideally, you may want to just say that, you know what, I'm cutting this off. I don't want to be in this trade. All right. But so where am I thinking that price could go to? Price could go to this fair value gap that is formed over here on the daily, but price could go to this particular point. This is called a breaker block. Now I know I haven't taught breaker blocks, so I'm gonna post a video on breaker block in the channel just for you guys to have a watch on it. Then you can understand what breaker blocks are all about. It's a little complicated, but if you watch it twice or 3 times, you'll definitely get it after a while, right? So just take your time and go through it. So I'm expecting price to pull up to this breaker block and then probably break down from there, because once again, like I said, I am still bearish. All right, my price is still bearish. It's still bearish. Nothing has changed. My price is still bearish. So I'm looking for price to go up here, reject off this side, and then come down here. That's my expectation for price for next week. It could so happen that all of this Monday, Tuesday, Wednesday, Thursday could be bullish moves, and then it rejects off this. Personally, I know there's some heavy news events coming up this week, so I'm expecting that to actually be the driver. All right, I'm expecting that to be the driver. I don't trade news events, but I use news events as drivers to what I'm already expecting to happen in the market. And looking at the market, you can see that on Tuesday we have PPI. PPI is producer price index. All right, so PPI is a heavy hitting news event, but not as big as CPI, which is coming off on Wednesday. All right, so CPI is going to be major news events. So we could either see price push all the way Monday, Tuesday, and then Wednesday we can have that clear rejection. All right, or so we could see price push up here Monday, Tuesday, and then reject here on Wednesday, or we could see price make very little pushes to the top side, and then on Wednesday hits this rejection block. And all right, so anywhere within this rejection block is very valid, and then rejects through that to the downside. That'll be my expectation for this week. So I'm going to be very nimble in price, and I have told you the places I'm expecting price to go. I'm overall bearish, but I'm expecting price to make some bullish movement before it goes bearish. All right, so I will not make direct calls on what I'm expecting for this week in particular, because this is going to be on a day-to-day basis. What do I mean by that? The kind of trade I'll be taking will be highly dependent on what is going on, what happens on Monday, Tuesday, Wednesday. All right, if Monday, Tuesday, Wednesday delivers to the breaker block, then I'm no longer bullish, because I know what I was expecting. I flip my switch to bearish now. All right, so looking at that, I wouldn't want to say that I'm bullish or I'm bearish for this week. No, I am bullish to the breaker block or anywhere below the breaker block. If it comes up to the zone, I'm fine. Anywhere within the zone, I'm fine. All right, once it gets here, I am bearish now. All right, because my overall target is bearish. All right, my overall target is bearish, and I'm expecting price to continue that bearish trend. So on a day-to-day, I'll be doing my analysis to see if anything changes. And if anything changes, I will definitely let you guys know in price. But this is what I'm looking at for the DXY. Unfortunately, I have to run now, so I will not be able to do much analysis on the euro and then the GBP. But on euro, you should see something very similar to this. So I'm going to give all of you an assignment. All right, for those of you who are in my Telegram community, I have done some analysis for you, and I've been doing some analysis for you for some time now. So let's see those who are actually going to watch this video and take it very seriously. But now, if you understood what I said with the DXY, just give it a thumbs up, right? But I'm gonna post the link to this in my free Telegram community, and I've been doing some analysis for you guys for some time now. And what I want you to do is just message me and give me your analysis on Euro USD and GBP USD, since I can't do that for you guys today. Let me know what you think. Euro USD is going to be, the key to this is Euro USD is going to be inversely correlated with this. In other words, all that you see DXY doing to the downside, you are likely to see Euro USD doing to the upside. So that's a key for you. Go do your research. Go look at the market, and what it's going to do is that it's going to train your eye to see the things that are supposed to be happening on the market. That way, even when you don't have me calling the shots for you, you can still do it by yourself. And that's what's important. What's important is not having me tell you how the market is going to play every week, but for you to have your own individual analysis, your own individual eye, and have the ability to call your shots and be bold about your shots, that what you really believe in, to be bold about it despite what anyone is saying, whether it is me or your next mentor, right, or any other mentor that you've ever experienced. The point is for you to be able to individually analyze the market and make bold predictions. That's it for today, guys. Thank you so much, and I love you guys.